You already know what time it is. Black Friday is around the corner, and what are some of the best stocks that you should invest in for Black Friday that can help you end 2023 on a great note and set you up for wealth for 2024? Let's go ahead and break it down. I'm going to give you a quick hint here, okay? This is an abbreviated list from our members only. They have 7. I'm just going to cut a few of those off and give you a good 5 that you should take a look and add to your watch list. But I'm going to give you another hint here. 2 of the stocks that are inside our members only are up 221% and 140% respectively. Okay, 221 and 140, 2 separate stocks, okay, and that's just in the last 6 months. So you want to make sure that you're inside our members only to get that, plus all the additional information that we drop there each and every week. But let's go ahead and start with the most obvious candidate here, and then we're going to move into those that are probably not on your radar. The first one is Amazon. I don't think I really need to explain that one so much. It's up 23% in the last 6 months, up 52% over last year. It's Amazon. You know they're going to go ham. For those who know what that means, and I guess it's also Thanksgiving, but they're going to go ham for Black Friday and Cyber Monday. I think that's relatively easy. Tech has been up this year anyway. You know what Amazon does, okay? That's the easy one. Here's where things get a lot more fun, a lot more interesting. Expedia. EXPE is up 40% in the last 6 months and up 37% over the last year. Both Expedia and Booking.com. Booking is the one that I own because I picked it up early this year. If I had to invest right now, I would go with Expedia, but they both are doing well because this is when people travel, and it's also in the tech space too. So it starts to really benefit from both. So you've got the holiday travel season, which still includes the end of the year in December. Then you move into New Year's, net travel season as well, and then you start to move into spring, where spring break travel, and then you go into summer travel too. So if you're looking for medium to long term, I think Expedia could make a whole lot of sense. The other part, and the thing that people would be concerned about is, well, what if we run into a recession for 2024? I would argue this, okay? Yes, there is a chance of recession. Now, from what I have read, it's anywhere between 30 to 50%. That's a wide spread, okay? And I don't know right now whether or not we're going to go into one. Number one, I would say that if you are looking between now, November, to about March, that is plenty of time for you to get in and get out and make what I would assume to be a good chunk of change between now and then. I'd also say that recessions don't happen that quickly, where we find out that's a recession in 2 days, right? Or even 2 months. It usually takes much longer, with the exception of COVID-19, which is utterly unpredictable, but I don't really see it happening that quickly between now and March of 2024. We'll see if that's going to be the case, but if that were to happen, travel is one thing that does start to fall off a lot quicker, whereas a company like Amazon, not so much because it's a subscription service. So pros and cons on either side of this, but Expedia, that is a very good one. Of all the ones here, this is the one I do have an asterisk next to of the ones that I really, really like, and there's another one here that I'll let you know of as well. Next on the list is Urban Outfitters. I'll be honest with you, didn't know they still existed, okay? Urban Outfitters is up 33% in the last 6 months and up 39% over last year. You'll notice that there is an interesting trend here with a lot of these smaller outfitters and companies that still sell clothes that, again, I haven't really been into any of these stores since 2007. Now, the interesting thing around this space is we expected retail spending to be lower, right? I've been saying that. We talked about the report, I think it was from Goldman Sachs and Yahoo Finance, that put all this stuff out as an estimation. And then we got some confirmation, again, from Yahoo Finance that is kind of the case, that it's a little dry, right, for the retail season. But some of these companies just announced earnings, and they are doing quite well. So while retail as a whole may not be doing well, the companies here are. So you want to pay attention to that. But Urban Outfitters, URBN, is the stock symbol there. Next on our list is AEO, American Eagle Outfitters. Now, I literally have not walked into one of these stores since 2007. Again, didn't really know this company still existed. I don't know how, but I can tell you this. They're up 39% in the last 6 months and up 28% over the last year. And their earnings, with the exception of this most recent earnings period, they were doing very, very well. Now, this is one that I think you have the most opportunity with. And that's because the stock did fall 15%. I want to say it was yesterday or today at the time that we're doing this video. Fell 15%. And this, if you like this for the long term, and again, for more than a year, it's been up 28%. So it still has perhaps some runway. But if you're looking to get this at a discount, right now could be the time. But I would definitely urge you to take your time and do your research on this one, because I would say the 4 to 5 days before and after earnings can be very, very volatile. So be careful with this one if you're going to look into it. But if you believe that this is a discount, you continue doing your research here, this could be the hottest one to get in at what we think is a low price. And really think about that. I mean, to drop 15% and still be up 39 in the last 6 months, imagine what it was before, right? You just really add 15% onto that. You can see where they were prior to us recording this video. By the time you'll see it, we'll see what it does on Wednesday. The next one here on our list is another one that I put an asterisk next to, is one that I am really, really close to buying myself. And as you know, it's almost time for me to come back and add some things to my portfolio. That is Ross. Ross, R-O-S-T, is up 24% in the last 6 months, and up 24% in the last 6 months, and up 21% over the last year. They have quietly been doing quite well, and it seems, I mean, maybe they're more of a discount retailer, very similar to TJ Maxx, which last I checked was also doing well. This didn't make the bar for this particular video. That people are, you know, still searching for deals, kind of due to inflation, and you're like, hey, look, I know that things are more expensive. Can I trade down, right? I think the slogan is like more for less or something like that. I dropped by. I don't shop for clothes, okay? I wear this every day for these videos. I wear them every day outside, but I'm not that big of a fashion person, so I don't walk into a lot of these stores often. But we know how the economics are, right? Things are getting more expensive. People are trading down to get more for less, or whatever that slogan is, and it's why TJ Maxx, it's why Ross and some of these others are doing well in times like this, and we expect that to continue for at least the next 6 months or so. We'll see what the Fed does, but I think as long as interest rates are high, and as long as inflation is relatively high, and I think it will be for at least the next few months, I think this company is going to continue to do well. The other part of this is, yes, inflation has come down, right? It was 9.1%, now we're at 3 point something, whatever it is at the time we're doing this video. I think 3.6 or 3.4 was the last time that we had done it. There's a lot of threes here. But remember, yes, it's coming down, but it's still an increase. Okay, it's a 3% increase. It's better than a 9% increase when it comes to prices and me paying them, right? But it is still high. And until the rest of the economy starts to cool off, or prices just drop as opposed to just increasing at a slower pace, I think Ross is still going to continue to do well. They also had a run, I think, in 2020 to 2021. They did quite well. So it is one that has had a bit of a good track record of something that you may want to pay attention to. So to recap, we got Expedia, one I like perhaps the most. Ross is also the one I will put near the top of the list. Amazon, Urban Outfitters, and then American Eagle Outfitters. And remember, there are two more that are doing way better than everything else that's on this list, but you can only get it inside our members only. So you want to make sure that you check that out. Also, if you're looking for other stock ideas and things to add to your watch list and research, you want to check out these videos right here.